Hello and welcome to Smartkarma's corporate webinar. I'm Sanam Nanwani from Smartkarma. This week we are hosting LMS Compliance. We are glad to have with us CEO and founder Dr. Louis Uy. We will start the webinar with Dr. Louis walking us through a company presentation, after which he will engage in a fireside chat with Smartkarma Insight Provider from Taneja. We are taking live Q&A. I would like to request our attendees to post your questions in the Q&A tab at the bottom of your screen. During the webinar, we will also share some links on how you can connect with LMS Compliance and read more research by Taneja. So please do keep a lookout for messages in the chat box. I now hand it over to Dr. Louis to walk us through a short company presentation. Dr. Louis, please.
Hey, thank you very much, and good afternoon, everyone. Let me share the screen right now, right? All right, can everyone see the screen?
Yes.
Yes, all right. Today, we're happy to present my humble company, LMS Compliance Ltd, which was listed last year in SGX under the Catalyst board. Yeah, this is our code that, and LMS Compliance offer.
Can't see. Sorry.
Can see the script?
We can't see.
Yeah, can you reshare?
All right, can't see the screen. Okay. Can
Okay.
Okay. Right now it's good.
Yep.
Now good, Okay. All right. Let me. Yeah. Against today is as LMS Compliance Limited presentation. Yeah. Company was listed in the last year's December. Okay. LMS offered quality testing and certifications services for the customer across gamut of industry, ranging from food to healthcare, industrial, and green technologies. Our main competitor is actually from for those big guy that has been listed in respective capital markets such as ALS, Eurofin, HGS, Bureau Veritas, and TUV, and also Serum, which is our icon laboratory testing in Malaysia. A lot of people ask me why the company name in such a manner called LMS Compliant. Let me give a head up today. Indeed, is an acronym of patent pending technology called linear multiple surveillance. I will touch it a little bit further after between the presentation, and it's actually strived of the accuracy, agility, simplicity, and security. Whereas the compliant are referring to our core business activities such as testing, assessment, and certification. A quick glance, we founded in 2006, and we have currently operate 3 accredited laboratory and 1 sales office in East Malaysia. We can run 1,100 accredited tests. When we mention accredited tests, meaning state that the result will automatically recognized globally. Currently, we employ about 110 employees, and more than 80% of our clients are repeated. Yeah, we registered around a net profit of CAGR at 8.8% throughout the year of study. Our minimum dividend payout is 20%. However, we were having the AGM tomorrow. We would like to propose 60% of profit after tax to be distributed at the financial year 2022 dividends. This is the general footprint of where are we now. Yellow color represented our accredited laboratory from the north in Penang, center is Shah Alam, and also southern state of Johor Bahru. The blue color is actually our licensing laboratory under LIM system in Bangi and also in Kuching. Black color is actually our sales office in Kota Baru near to our East Coast, Malaysia. We service to various sectors such as food, feed, fertilizer, pharmaceutical, medical devices, healthcare, industrial, and green tech. This is our 5 business segment. I'm not going to touch all the business segment in one go because we only have about very limited time to go in depth. However, testing assessment is our major revenue generator, consists of about 95.9% of revenue. The second go to the certification 1.3, and then trading about 2.0, and distribution of our technology is about 0.08. We only touch about a couple of the important segments such as testing, certification, that actually can articulate and our new our new business segment, which is our fifth business segment, ESG reporting and compliance services. Let's take a look at the quick business video before we start to go into each business segment. Thank you very much. Let me go back to the sharing of my slide. Okay, let's go about the first testing services. We actually provide the testing services on to the environment, such as carbon footprint. Can see the screen, right?
Can.
Yeah, can carbon footprint, and also noise pollutions, water pollutions, air pollution, and also some waste analysis as well. This is actually to satisfy the testing for the environment. We also provide testing related to social perspective, such as food safety, for their container, from their chemical and microbiological contents, as long as the sample to be exported from one country to another. For the industry compliant wise, also under product safety, we provide the REACH and ROSH compliance, which is imposed by European unions, to make sure that the environment and products are actually don't harmful to the environment and society. Lube oil, face mask, PCB board, hand sanitizer is among our testing capability, which is currently served by for the industry. This is the general distributions of the segment. Food and feed constitute about 37%. Greentech environment is about 15%. Pharmaceutical is about 13%. Medical device is about 14%, and healthcare for 18%. And lastly, go to household, which is 2%. For assessment services wise, we provide the workplace safety services or assessment to certify the general working place safety for our employee. So this is also one of the social compliance requirement under the ESG reporting standard. With these testing assessment services, easily can satisfy 8 numbers of SDG imposed by United Nations. For certification services, on the left is environmental related certification services that provided by our company. 14,000 for environment, 45,000 for workforce safety, workplace safety, 2,000 HACCP for food safety, and the remaining right hand side are towards the governance of the certifications such as ESG reporting, ISO 37001 for anti-bribery, ISO 27001 for information security management system, and other go to the social audits such as RPA, TDEX, SA 8000 similar certification, and so on and so forth. This is actually our ESG reporting landscape, where we actually provide level 1 and level 2 data collection and also reporting services. And we will expand to another segment soon and later. In order to be more competitive, we indeed digitalize our first product called iSIM. So this is the iSIM's sticker or QR code that can afflict to the product itself, point of sales, water discharge, chimney discharge, or even vendor machine, so that the client or consumer can scan and immediately access to the big data, how quality of the product they're going to consume and place to buy. For certifications, our future plan is actually to digitalize the entire document management system, where our system can be easily take over dependency of human on maintaining respective ISO requirement. Lastly, this is one of our forte, our technology that always stress on simplicity, security, and accuracy, and also the agility, where we actually craft quality infrastructure to place demand and supply into a single platform, where we can see to host all our participated laboratory in the single platform. Let me touch a little bit on financial highlights. As mentioned earlier, our revenue is about 18.7 million ringgit Malaysian and grow 8.8% compared to the Q1 and second half of 2022 and 2021. It's about plus, we grow about 9.9%. Our revenue right now are focusing on the testing and assessment services, as I mentioned earlier as well. For EBITDA, we are having a very sexy bottom line. As you can see, our net profit is about 30%. It's about 30%, and this is actually our profile. And also the EBITDA are growing at about 38.9% in second half of 2022 compared to 2021. Lastly, we would like to take everyone to this Yahoo Finance reported on LMS Catalyst, LMS Compliance Ltd. Is it a high quality stock to own? According to the article by Yahoo Finance, our ROE of this LMS is about 34%. Meaning $1 equal to 34 cents as a profit. And it's clear that LMS compliance had better ROE than the industrial standard, which is 30%. Moreover, our DE ratio, debt to equity, registered at 0.13. Hence, we are far from excessive. Therefore, with the ROE, which is very, very high, and using a very low debt, indeed, LMS compliant is a good stock to own. I'd like to end it with the last slide. The board director of our company is actually very independent. First, we have independent chairman, Datuk Farida, as the Standard Malaysia's ex-director general. We have Mr. Ong as our AC chair, and we also have Datuk Gui as our NC chair. And Datuk Gui is independent director from Security Commission and also EPF in Malaysia. And Ms. Wong, independent chair for the RC, and whereas we have around 30% of women participation and about 20% of international foreign director participation. Hence, I would like to end the presentation today. Over to you, host.
Great. Thanks so much for this introduction, Dr. A. And I just wanted to ask you a few questions about your company. You've given a very elaborate presentation already, but maybe what we could do is elaborate a bit on the barriers to entry of the business. If you could touch on how difficult it is to actually do this vis-a-vis someone who starts from scratch, that would be great.
First thing, I think our business generally are highly regulated. You need licensing and you need approval from a respective government agency in order to issue certifications result, so that the government will accept. So the first barrier entry is actually the approval from respective government agency. The second level of barrier is actually the investment cost is bit high compared to the others industry, where you need talent and also very reliable capital employment on the instrument. So that is answer to you.
Great. Okay. So when we go through, the licensing process and approvals and, jumping through hoops on the regulations, what's the time period in which this happens? Maybe take, for example, your company, how long did it take you to be able to get through this entire process and then get your business up and running?
To unlock your questions, first thing first, we need to get the before we get able to get the licenses from respective regulator in respective country. I think I spoke this on behalf of all the countries should be the same. The first thing is to get accreditation. The accreditation are utmost important as compared to other licensing, because if you cannot get an accreditation from respective accreditation body, you will be not getting any approval to get the license to issue the certifications result to the industry. Hence, first thing first is to get accreditation, and this accreditation are also being governed by the ISO standard. In short, we call it 17025 for testing and 17021 for certification. So in order to get this to maintain this system, and ISO impose a lot of stringent requirement from time to time. Hence, the total minimum time period that you need to get accredited is probably more than a year, and is to get probably a couple of scope, and it's subject to the different area of testing parameter that you would like to be accredited, and this is voluntary basis. Hence, like our scope, we have about 1,100 testing scope parameter. It will take long time. It will take long time to maintain and also to get it accredited, probably a couple of years. So hence the time frame minimum is about 1 year, and maximum is depend on the scope that you want to venture in.
Right. Okay. So we're talking about a lot of time here. Okay. And when you onboard your customers, which is the next part of the chain, talk us through that process. How do your customers come to know you? How do you sort of get into arrangements with them? and how do they pay you, and later on, the stickiness of your customers once you acquire them?
We are highly depend on word of mouth. I think word of mouth is very important for our company as the service provider. Like it or not, we are no different, completely no different compared to other player in the market. As you can see, we are implementing, we are having a business which is actually using a same factor that influence the result. Number one, the resource number one is actually instrument. We are buying a same instrument which is produced in Japan or Europe, yeah. And we are hiring a same talent from local universities such as UM, UKM, things like that. And lastly, we are adopting a same methodology, yeah, the testing method. So with these three factors, we should be able to end up a same result. What makes us different is branding, brand experience, the delivery promises that by the company. Like us, we has been digitalized, we has been articulate and advocate strongly on simplicity, security, accuracy, and agility. That's what the brand value of our system. After we bought our client, payment are basically on catch them if they are start in the business. Else we will go for term. Our basically our debtor turnover is around less than 60 days as compared to other player. We are considered very good. And of course, after the payment methods that we granted, to get the other customers, sometimes we go for government tender. But our general 6 million ringgit or 6 million Sing dollar revenue, I think a very rare wired tender are basically more on enterprise revenue, which is generated from year to years.
Okay. And when we think about your customers and, how sticky they become once they sort of start working with you, are there any metrics on that which we can understand?
Yeah, you're right. Yeah, I guess government client are very smart. They will not maintain only one supplier. It's due to the dependency. Many of our clients are maintaining more than one labs. However, between this maintenance of the laboratory that service their services, we would like to be the major. Yeah, we would like to be a major player to serve the particular company. Hence, stickiness of the company is a client to a company is actually depend on the customer services and also the delivery result and easy to make business with our group. I think among the factor that we won a lot of client satisfactions to that extent. We improve when we actually send the a result. Because we are after digitalizations process we implement 5 years ago, we never send hard copy. Via digitalization, we also inject the so-called survey, comment, rate us services, and we get a very, very high these customer satisfactions reply as compute based on net promoter value, where a lot of people give us 9 and 10. Yeah, 9 and 10, which is +1. So we, as high as we got positive 60% on our customer retaining or happiness toward our services. I guess I guess a value to value our services. We always stick on the few area that accuracy, agility, simplicity, and also security of making business.
Okay, great. And in deciding what your segments are and getting into or foraying into new segments. So, for example, you're in healthcare, you're in medical devices, you're in food. How do you come about deciding this? Are these like very generic and then you like get into it and the metrics are the same, or they're sort of there's sort of an analysis where you look at the total addressable market and then decide to actually get into something like that and then invest in it?
Yeah. I think to answer your question, right, the total addressable market is one of the key factor. Of course, we had to look at the market's attractiveness and also how frequent they send sample to the commercial laboratory. We cannot simply just jump into the industry that which is totally unfamiliar by us. However, from the angle of increase the capacity of testing from our existing our so-called sunk costs, we will make addition based on that. Example, I'll give you an example. We will never start from a very sophisticated market. We start from the probably feed market, feed industry. This is required lower requirement for the industry player. And when you actually conquer and you actually establish yourself from the feed market, perhaps you can move to food. And then from food, we went to the pharmaceutical, which is much more stringent. And lastly, we ended with the medical device, which is super stringent industry that require clean room, require additional capital investment on the particular testing. I think in a video, there's one man that fully on suites is actually a medical devices testing laboratory that which is 10K classroom that we built to cater the medical devices client in Malaysia. Yeah, that's how we grow along the way, from the capacity, from the market attractiveness, and also from the sexiness of the industry.
Right.
Yeah.
So just to summarize, it's more a process of evolution in the sense that you first start with something that's generic, and then as you prove yourself and you gain brand value, you move into more stringent industries, which am I assuming this correctly? The margins associated with those industries get higher, or is it like very similar across the board?
Yeah, I guess when we're making a business decision, right, don't expect low risk, high returns. It must be associated with the risk and return. Of course, those sophisticated segment will definitely give you higher margin. And of course, the industry player are very demanding because of stringency of the product quality. You cannot simply just release a result that first thing for the feed for animal requirement as compared to human implant requirement, a totally a different paradox. Yeah, between the same horizons. Yeah.
Understood. Okay. So can I ask, how do you differentiate yourself from competition? There's so much competition you have. There's big names like TUV and Eurofin, and then there's SGS, ALS. How do you make yourself different from them in this industry? Because I guess they're following a very similar path to yours, or they've got some of them are around longer than you have been. So like, how is it that you've made yourself this niche?
As I mentioned just now, we are using the three factors are the same. Yeah, and now the result should not be changed too much. The branding and also the brand value are so important. We can actually retain and also sustain our competitive advantage is actually we are fully digitalized, and we invest a lot of IT and a lot of the technology behind creating a workflow that which is simple, secure, fast, and accurate to our client. When you actually can satisfy these four major requirements by the client, right? It's very hardly for them to shift from brand A to brand and another brand. We want to be a top brand that they always think about accuracy, security. You go for a company, and you're talking about something else. Probably you can select other alternative, because in this world, like it or not, the competition is there. You will never kill the competitor, in one day or over the night. But we had to find a way to coexist where you actually always be the first one in mind. That's our philosophy of coexistence, and we provide better services, faster services, simple business relationship, and also highly secure. Mean the result cannot be easily being changed, and then highly accepted in the world. That's what we coming in. Branding, confident, and also the trust between ourselves and client.
Right. And can you talk a little bit more about your digitization? So you've got iSense now, and that's going to probably become a bigger contributor for you in time. So Maybe just walk us through like
Yeah.
how the model works there and what our intentions are to grow this.
Yeah. I would like to use this example like certification. We came into certifications industry slightly late as compared to our testing industry, as you can reflect it on our revenue. About 90% is actually from testing assessment, and certification is actually the remaining residue of our revenue. Making this actually a new, complete new segment, right? Is totally different from testing industry. First thing, we look at the current ISO certification services. So a lot of the consultants are providing hard copy solution to the newly client to be certified by ISO standards such as 9000, 40,000, anything. They are highly on hard copy. Consultant came in and coached them, a new company, to be certified soon by using all the hard copy, the kind of documentation, because it's talking about traceability and document control. Hence, we look at this particular juncture, we actually think about how we actually want to compete and we create value for the entire ISO so-called industry. We actually digitalize and the document management system technology. We do that. So this is actually to bring down the dependency on we call it management representative to maintain a system, because the management representative easily come and go. When they resign, someone need to take over, probably you higher cost to hire this particular person to maintain the system. But using technology, you actually reduce the dependency and you unlock that particular person to create more value on the other routines services or work. So hence digitalization is one of our forte, and also is actually in-house. We never we do it in-house. We have one very creative and also committed coder with us that actually crafted toward the digitalizations area. So
okay, all right. And so in talking about competition and what competition makes, your margins are extremely high. You've got 30% net margins. Can you talk to us about maybe the sustainability of this? You've been running this business for several years now, but in the prospectus we see only 3 years worth of margins.
Yeah.
Have you been able to maintain a 30% margin for a longer duration of time? And also, what's the sustainability of this margin as you kind of expand your business further?
Good question. Okay, for the first, I think I make it into 3 phases. Before fully digitalization, our margin are not that sexy because it's highly depend on, you like it or not, this industry is actually labor intensive, and the labor is actually all university graduates. There's a couple of PhD holder and master holder that work under our company. Hence, our labor costs are quite high, and very labor intensive. So prior to digitalization, our margin are I think similar to the number of player right now, even in Singapore and country like China and all. They are also very surprised how can you do 30% at your bottom line. So the second phase go to digitalization. When we digitalize, the whole entire workflow has been digitalized, it take over those mistake, complaint, and also inaccuracy of giving information to client, and you unlock those especially our administration staff, we call it customer service staff, that doing certifications, produce this certificate of analysis, and now they can unlock to do more customer service task, and you can actually follow the quotation, and you can win more faster and convert the quotation to become an invoice. Yeah, that's how we do. The last part is actually last phases that we are facing right now, whether to able to sustain or not. So digitalization have uplift our bottom line from probably 20 to about 30 or 15 to about 30. throughout last 5 years. And after the listing, we do have some costs, the listing costs. So the listing costs and compliance costs will definitely impact the bottom line. However, I guess and be able to so-called maintain or increase our bottom line, our top line, our revenue. The sunk costs are remain unchanged, and you will be come back to the normal. But you will be probably indeed certainly for a couple of years to go back. And I think we have a very good future on 2023 today, this year's, where we able to do a rebound, extreme rebound as compared to the last year's, because of it has been actually all the listing fee has been used to offset our revenue, our bottom line last year's. Yeah, thank you.
Right. Sorry, just to clarify, so you had obviously you had a listing fee in 2022, right? Which kind of when I adjust for that shows still a 30% net margin adjusted, right?
True.
But are you saying that the next 2 years you will also be incurring some costs associated with your listing and compliance related as well, which will impact your margins?
Yeah. Because we are catalysts as well. We need to hold hand by the investment banker.
Right.
There is actually a cost that need to be incurred. So that particular, if you take over the cost, I think we should able to maintain the the 30%, because we did not change too much on our cost structure, especially on the labor aspect. We as our major cost, but to maintain the our entire operations and also compliant in the as a listed co, we incurred these additional costs. Yeah.
Understood. Okay. Yeah. And so theoretically these costs will sort of bring your margins down, but revenue will sort of help offset, and your margins will
correct. Exactly.
Still maintain. Is that the way to think about it?
Yep.
Okay.
Exactly.
Okay. All right. When we look at your growth prospects for 2023, I know you mentioned that we've seen a rebound. How was 2022 also affected due to COVID for you, and how much would you quantify the impact? And now that things have opened up totally, where do you see yourself grow in the next, or what rate do you see yourself grow at in the next 3 to 5 years?
We look at this COVID, right? Indeed, COVID came very fast. I still remember in 2020, on March, and the company are actually being asked to shut down for a couple of I think between couple of weeks, and then quickly we obtain some letter or some support from respective government agency that we can actually operate. Yeah. So indeed, and indeed, when the SOP from the MCO become clearer, in fact we don't impact much. We still can run the business. We still making quite good profit. If you go back to the books for 2022, we are still getting a very good profit as compared to 2019. This is because we are very agile, and we quickly identify a new testing requirement, such as the face mask testing, like sanitizer testing, which is completely new. Yeah, right. Completely new, and this is the gaps. So we are making this so-called surplus, not surplus. Making this additional bottom line to offset those factory or those not essential industry to be shut down. And by doing that, indeed we create another value for the company as well. So in short, COVID didn't give us much impact, as long as concerned agility, and we are agile to actually reflected, or we are resilient enough to identify the business, and then you go into it. You will actually successful on the even a hard time. So for the next future, I guess the market is open. Yeah, then with this new asset, RCEP, and also the open up for the trade, I personally and we actually have a very bright future. As far as concerned, TIC testing and also the assessment and certifications industry will never end. because of there is as I'm concerned, there's a trade between bilateral nation. That is actually a business opportunity for us to be certified and to test their content or the product from one country to another. That is actually a bright future for a TIC segment in the world. Also reflected that our major competitor or player, which is exit more than 150 years, and they have 1,000 footprint in the world. And because of the trade, international liberalizations of the international trade in the groups, it creates demand.
Okay, all right. So if we were to look at the next 5 to 7 years, what rate do you expect to grow at? You've been growing like high single digit, 9-ish% or something in terms of profitability, and I guess it would be similar on revenues if your margins are similar. But what do you expect your rate of growth to be going forward now?
Okay. I look at two perspectives. The first perspective, I think first thing we have to recognize that in the market research that you easily can Google, TIC growth rate on average is about 3 to 5% per annum. I think different report that actually have deviated about 2 to 3%. Some say 5, some say 3, some depend on the area. But in Asia region is about around 5%. But you look at our growth rate theoretically based on concept number one, based on organic growth, it's about 8.8% growth on our revenue, easily on our revenue growth. However, if you are talking about the possible, our plan to be listed is actually to invest via JV and also MA in ASEAN regions. If this company actually integrated in the group, the revenue will grow up, and also the bottom line will also improve. Hence, for organic growth, theoretically on organic growth, we should already grow higher than the industry standard. If with all the successful on the merger and acquisition and also joint venture, you will definitely add on to beautify the bottom line and also the top line of our groups. And it's actually bright for us to do that. Also you look at the impact of the ESG reporting requirement. That's actually, like it or not, we are the one who produce the social and scientific data as a part of the requirement, the data to be injected into the ESG reporting. Hence, it created additional testing demand for the general market, not only from listed co, but the listed co will impose and influence their vendor to comply with ESG reporting, because their emission from their supplier emission is the list code emission as well.
Right. Okay. And so, like, you raised all this money, you raised 3.6 million, and I guess part of it got taken away by the bankers, about 1.6 of it. You got 2 million in your hand. And so when we see this 1.2 million, which you've signed for or allotted for JVs and alliances, can you give us a little bit of color, maybe quickly, on how would you propose to take things there?
We would like to do two things. Frankly speaking, the fundraising is not huge. I always make joke to my investor. I say this is not the fine dining IPO. We are Nasi Kandar IPO, small IPO. Why we want to do that? Because of the like it or not, we are in compliance services. So when we are in compliance services, I guess listed is listed with a very independent, crafted, very well board director. We will put positive pressure on our business performance. This is number one. Number two, we don't mind to have a lower fundraise because we still have a lot of spread to be like, for example, share swap. We can actually still issue new share to our potential target, so we can keep dilute and with a very potential target around ASEAN region. So that's how we do it. And of course, we conserve some cash in order to expand our accreditation and also our digitalization, such as data center, data recovery, the kind of technology to protect the data hosting and hosting. So that is how we come in the pictures.
All right. Okay. I guess in the interest of time, maybe I'll ask a final question on your capital allocation. So you've obviously talked about having a 60% payout ratio for 2020, or proposing a 60% payout ratio for 2022. And you talked about 20% being at least the floor. How did you go about deciding this? Because I guess you just did an IPO, you raised some money, and then also, you know, how do you assess what's necessary in capital allocation? Why not a buyback or a buyback mandate or something like that? Maybe if you could give some color on that, that'd be great.
Yeah, thank you for your questions. There's no promise for the future dividend. However, in our offer doc, we put 20% as very minimum, which is very affordable. You look at the book, and past 3 years, we have actually run up a very low debts, and also been cited by the Yahoo Finance, very low debts. Hence, it's actually a very profitable and cash generated businesses that currently we have. Hence, with this, we have actually an option, the option to just come up a win-win situation, not only for the investor and also for the business as well. We are looking at a juncture that balance these two forces, because in the end of the day, I guess being a CEO, I not only need to take care of my employee, 110 employees, now I need to take care of more than 300 shareholders as well. I had to make them happy so that they can keep on invest on the stock.
Right.
So one of the way is to establish a very sexy so-called, dividends policy, so that we can actually outshine others counter with the same category. That's what I coming into the picture.
Understood. Okay. And so there's no guarantee on the sustainability of the 60%, but at minimum you'll be doing
20%. Yeah,
okay.
But it all depends on the performance of the company. If the company are doing well, I think the indicator is that the first distribution is so high, probably it will be another considerations in 2023. Yep.
Right. Okay. Sounds very good.
Thank you,
Dr. Lewis.
Thank
you so much for your time, and I wish you all the success in the future, and
thank you.
I sincerely hope that you grow much more than 9%.
Thank you for your time, and also glad to be invited by the you and also your company, so that we can do our style over here and share with our thought with our potential investor. Thank you.
Sounds good. Great.
Okay, bye.
Bye.
Thank you. Bye.
Thank you, Samir, for some very interesting questions, and a big thanks to Dr. Lewis for a detailed insight into LMS compliance, the challenges in its sector, and opportunities for LMS compliance. I would also like to thank our attendees who joined this session live. With that, I would like to wrap up this week's corporate webinar. Thank you again, and have a great week ahead.
Great.
Bye-bye.
Bye-bye.
Bye.